Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin for our charts. So we find ourselves down here at this deep in this support area. Obviously looking particularly precarious here. If we lose this level, and especially if we then come down and take out these lows, then we will certainly be looking at 17 and a half. I say certainly, obviously nothing's certain, but we will highly likely be seeing down towards 17 and a half, and maybe even 16 and a half. We'll just extend this support along here. So yes, we are currently testing that. That is not to say that is definitely what is going to happen. We obviously know if we're nearer the support, we've got a greater chance of breaking it than we have if we're away from it, and obviously here we are right at it. Traditional markets, if we want to look at them for some direction, they have been easing off, which has obviously been dragging Bitcoin down, but they are at a potential level. As you can see here, if we draw a horizontal in here, there's a bit of confluence here, so there is obviously the distinct probability that we do basically get supported at practically where we are now and then turn back up. If we do that and we take out this high, then yeah, we could see a nice move up into this resistance and potentially beyond. What we have got going on though is an absolutely disgusting, absolutely just disgusting move in the DXY. This is a massive red flag, a warning. This is indicating just the massive illiquidity in the system, with the Fed obviously wanting to tighten. I don't know how much it exactly is running down its balance sheet, because I've heard that it isn't really, and it's doing some off balance sheet shady stuff to try and reliquify the world's dollar system. But obviously they ain't doing anything like enough, and this has to stop. This has to stop, basically. Something will have to be some sort of intervention. The world isn't going to put up with this. The euro can't be collapsing like it is. The Japanese yen can't be collapsing like it is. We can't be having all this crazy stuff going on. Emerging market currencies can't literally be like not being able to collapsing, and then them not being able to afford food and have riots and everything. This is literally taking out the global economy. I'm not sure why it's been left to go on as much as it has. I guess it is just because of the inflation prints, but yeah, I mean, I cannot stress how disgusting this is looking, and that's something that has to be done about this. On the flip side, though, it is getting very extreme in this asset, which means that we are probably inching closer and closer to some sort of intervention, and that intervention is ultimately going to be very stimulative for risk assets, and at which point we could see, we could potentially see a bottom in risk assets, and then we could get moving. I would say this has to have one last spike up, but I mean, it's just been spiking up this whole time, inching towards that 110. I think it's, if we look on a larger time frame, I believe it is around 109 where we get over, and then there is not much not much in way of any sort of resistance. Yeah, difficult to see exactly, unless is it around 109? I don't know. They're the numbers I've seen touted around. I mean, I guess yeah, anywhere between where we are and yeah, anywhere where we are between 1 and 9. We are looking at larger time frame charts here, but yeah, I guess around the area, around where we are now, we do obviously need to. I mean, it's just going to explode higher. Next stop, if we do break high from here, is going to be we open up all the way up towards here and then beyond. So I mean, literally the world can't cope with this. So yeah, like I said, on the flip side, something has to be done. So yeah, there we go. The 10-year though, as you can see, is clearly pricing in the increasing chance that this is gonna, that the actual the current dollar index is gonna basically cause some serious problems in the economy, potentially, well, probably a global recession. So yeah, we want to look at that US Japanese yen. There we go, wrecked. Also, if you want to look at that Euro USD, have I got it on here? No, so we'll just find it real quick. EUR USD, that one will do. Yeah, look at it. Just it obviously this is an inverse. This is obviously an inverse to the position of the USD JPY. So you can see that this is yeah, I mean, this going up and that going down is basically the same thing. It is these currencies collapsing against the dollar. Yeah, like I said, it's just it ain't acceptable. The US basically can't keep its world reserve status, and literally no one will be able to afford the currency of that world reserve status, world reserve currency to do any of their day-to-day financing and like just liquidity operations. So yeah, there we go. We are getting close to a head. Obviously, gold is hating this, as you would expect. It has done well so far to stay at these relative elevated levels in the face of the move up in the DXY anyway. But now it is succumbing to obviously downward pressure just to the move. Oil also is looking like this is gonna come and test lower. We are potentially gonna put in a, well, potentially there is the potential to how many times can I say potential? We could be putting in a larger time frame descending triangle here that will then break lower and yes, and obviously drag this down towards into the 70s. As you can see, the low, we potentially put in a lower high, maybe around 108, and then come back down and take it out. Obviously that a bit of speculation there, but yeah, I mean, I'm telling you now, regardless of what all these crazy oil bulls are saying, this ain't going up. If we are going into a global recession or difficult times, yeah, I mean, stimulus is pretty much needed. Not for market, literally not for markets specifically, just because of this, what is a liquidity crisis. This we are clearly indicating there is a liquidity crisis here. This isn't even necessarily a flight to safety. This is just a pure liquidity crisis. People needing to get the dollars, to use the dollars for various things. Not people just, oh, I'm just going to park this extra capital in the dollars and just wait it out. I mean, these are required dollars. So yeah, something's gonna happen, something's gotta give. Maybe we do get a leg lower, maybe we do get a leg lower in the stock market, and obviously that would drag this down with us. Maybe we do get another spike up above 1010 before the world is literally yeah, I mean, the world will be looking at alternative reserve currencies. Trust me, if the dollar is going to start doing wild stuff like that. But yeah, if we can get held here, supported here, literally at this level, same with Bitcoin at literally at this level, turn back up. If the DXY can turn down literally from this level, then yeah, all systems go. Potentially can look good, but if they don't, yeah, we'll be coming back down, testing these lows in the stock markets. We'll be coming back down, testing this low, potentially even lower in Bitcoin, and the SH1T is gonna hit the fan. So yeah, there we go. That is pretty much it for this morning. That is literally the only real focus for me, and really should be on this market, is this DXY, is the dollars, the liquidity crisis that is basically getting telegraphed here. Something's gonna give, something's gonna happen, and yeah, it's probably gonna happen soon, because this is just not acceptable, basically. So there we go, guys. Remember, this is not a financial advice, it's not a financial advisor. Always do your own research, and I shall speak to you guys soon.